buy or sell CyberArk? First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So we have CyberArk under a trend that I call cybersecurity. So 39% here from the 52-week low, but we have seen a minus 30% pullback. So here you can see the average performance of these stocks from the low and also, the pullback. When we compare this cybersecurity theme to the ETF, and here we have the ETF, the hack ETF, you see that it is definitively, it's certainly seen a big pullback, but not much left here of the rally from the lows. Anyway, here is CyberArk, 20% flown from the lows, minus 32% pullback. So this is definitively a stock that is in a bear market. So log4j vulnerability, what to know, what to do, and how to stay ahead. So identity security solutions, secure access across any device anywhere at just the right time. I think that cybersecurity stocks are very interesting at this point because we haven't seen a full-scale cyber event, but that is likely to happen in the future. There's been a lot of talk now about the conflict between Russia and Ukraine. I do think that if tensions really start to build there, I think it's way more likely that we will see a major cyber event instead of the old school boots on the ground situations that were very characteristic of old school warfare. But I think the future is going to be very different. That it will simply take the manifestation of hacking and more broadly digital manipulation. So here's the chart of CyberArk. We see that for quite some time we have had these very major big time cycles, and they have been pretty darn reliable. Rise, decline, rise, decline, rise, decline, and we are still part of the major time cycle. We see that within, at least recently, there's been a tendency to have two smaller time cycles. And based on the smaller time cycles, there is the expectation of a rising phase around the corner. The blue 100-week moving average has been important in the past as a resistance level, but also as a support level. And we have recently bounced from that very key support level, and we do have a rally in motion. When we go here to the daily data points, a key resistance level that we are battling is this purple 20-day moving average. When we look back, we see that it also is a moving average that has been important as resistance and support in the past. That is definitively a very, very key moving average to watch going forward. The bulls have already started to rally. So if we measure a bit here from this low, the bulls have already gained, a 10% move. And that is without, breaking out above that 20-day moving average. To go all the way up to these old previous highs, that would be a 61-ish% move. The challenge for the bulls is that you have the 20-day moving average, but also the 200-day moving average and the 50-day moving average also very likely going to offer some resistance going forward. Then let's look at some of these other, indicators. So looking here at weekly RSI, we are currently emerging from a historically very low level. The vast majority of the history of this stock, RSI has been more elevated. Looking here at the distance from the purple 20-week moving average, it emerged from a key low. If we look at some of the more recent times, like back here, where we emerged from that very depressed level, that led to a sustained multi-week rally. If we go even further back, if we look here at these lows back here, then we did have a sustained rally. So compared to the previous times where we emerged from a very depressed, for all intents and purposes, oversold level, at least in terms of the history of this stock, then yes, you could make a case that there's more left in this bull move that is in motion. Looking at the daily data points, similar message, especially when we look at the longer term moving averages. The previous time we had this very depressed distance from the blue 100-day moving average. That is back here, and that led to a very sustained rally. And back here we did go even lower, and that led to a very long-term rally. And when we go back here, also we did have a rally that was far longer in duration than what we have seen so far. So as such, even though yes, the bulls have already been able to score some points, there could be significantly more left. Here is the seasonality data for CyberArk, and if we start here with the last 5 years. Over the last 5 years, you see that February, it is a bit of a mediocre-ish month. We close higher only 40% of the time, but on average there is a 1.3% gain. March is 50-50 with an average loss of 4.7%, but then April is extremely strong. When we look at the seasonality forecaster, which also look at the last 5 years, but it takes just the plain average, and we do see that looking at March, April, and leading up to May, it looks pretty darn bullish. So the seasonality here over the last 5 years of history, it definitively is a big point for the bulls. When we look at the last 9 years of data, February is on average very strong. Average 8% gain, that is big. March, on average, there is a loss, but it does have a tendency to close higher, and then April is very strong. As such, we could definitively give the seasonality analysis to the bulls. Looking at Finviz, we do see that we recently bounced here from this trend line that they draw. That is, of course, a point for the bulls. Just year to date, the stock is down a whopping -21%, so that is big. Options are available, so there are a bunch of opportunities for those who want to get a bit extra fancy. So now let's look at some fundamental data. So Sachs think it's a number for sell, F value, F growth, B momentum. That is obviously not bullish. Industry rank top 28%. They have a very broad category of security. Market cap $5 billion, so big, no dividend. Then let's look at what the insiders are doing, because they know the company better than anyone else. I don't get any data here about insider transactions. Let's look at the consensus among the analysts. So 23 are covering the stock. Average price target is 53% above the stock price. Highest target is 72% above, and the lowest target is 2.38% above. So I will give the fundamental analysis a bit of a 50-50 here, because the price targets are definitively bullish. Sachs definitively not feeling the love, and we did not get any data about insider transactions. So let's here look at and Sachs is a big name in the industry, so I do prefer to lean towards what the data they provide in terms of insider transactions. They are really deep into the halls of Wall Street. So here is the correlations. So 77% with the S&P 500, 70% with the technology ETF. Interestingly, actually lower than the SPY. Then we have 80% with the hack ETF, cybersecurity ETF, and then minus 40, okay, 46% with the dollar index. Daily data points: 60% SPY, 52% XLK, 72% with hack, and 20% positive with the dollar index. So what happens to the hack ETF is most likely going to have an impact on CyberArk software. So let's do a quick analysis of hack. The interesting thing here with hack is that it is emerging from a key support level, similar to what we saw with CyberArk. So here, oops, no, that's the wrong color. We can't have the wrong color. Blue. So blue here, support. The support here, support. So it's pretty clear that this blue 100-week moving average, it's been good risk reward for the bulls in the past. So it's definitively a very key level. If we go here to the daily data points, yeah, here again we do have that 20-day moving average offering resistance. So that is just the situation. You could of course wait until the bulls break out above the 20-day moving average. But then again, that kind of logic could also make you think, okay, maybe I should wait until we get above the 50-day. Well, maybe wait until we close above the 200-day. And then, of course, you start to move it along, and then essentially you are out of the security forever. Okay. Now I am looking at CyberArk versus hack, to see whether there's been underperformance, overperformance, or whether it's been a standoff. So what we do see here is a very interesting technical pattern that is called a rounding bottom. So CyberArk has been forming this rounding bottom vis-a-vis the hack ETF, which means that CyberArk, it has been, at least since these lows here, it's been outperforming the hack ETF. So being in CyberArk vis-a-vis being just in hack, it has actually been able to offer some alpha. Let's quickly look at CyberArk versus the S&P 500, the major index. It is definitively very interesting to see that when looking at them as a pair, they do have this tendency to move in these cycles. The cycles have, however, differed a bit in duration. You could argue that we are currently forming something that looks a lot like a double bottom. And previous times you see that when a low has been formed, it can lead to some pretty sustained rally for CyberArk, meaning CyberArk outperforms being just in the S&P 500. So, to sum up my take here for CyberArk software, I do think that looking at the technicals, there's more reasons to be bullish than bearish. There is some resistance levels that we have to contend with, but that is very often the case. The seasonality is definitively very interesting, so that is a big point to the bulls. Looking at the fundamentals, it was messy. The price targets are definitively very bullish. But when we looked at, what Sachs had, analyzed in terms of, the more, the growth prospects and valuation, yeah, that was a bit more bearish. But I would give it a bit of a 50-50 on the fundamentals. In terms of the correlations with that we did see with the hack ETF, there's something interesting happening with hack as well that you could definitively characterize as bullish. And further, CyberArk has a good history, at least recently, of outperforming both the hack ETF and also it's forming a very key low vis-a-vis the S&P 500. So taking all the evidence together, I think there's more reasons to be bullish than bearish on CyberArk. In terms of when to get out, I think that there is a pretty key stop level in place. Looking at those weekly data points, we definitively do not want to see recent support levels become resistance. If that happens, then that is a very clear sign that the bears have more aggression left in them. Because the current situation in the market, S&P 500 and all of that, you have that big question. Are we seeing just a bounce now, like a dead cat bounce, before further sell-off? Or did we form a more like key low? That is still to be determined. And it's very important to be positioned for both outcomes, which is why I'm a huge advocate of having market neutral portfolios.